healthcare, education, real estate, housing, financial services, like things that as society we really care about. You don't have a way to connect to the banking system. You don't have a payment operations software product that exists.
The total money moved, it's like 750 trillion a year, like quadrillions of dollars, but just the size of the transactions happening are astronomical.
We kind of know how to solve this problem. And so we kind of felt like, hey, we have an obligation to go build this because it is going to enable like all these companies to go innovate in housing costs and how payroll runs and how do people get, healthcare. And like, that's something that we felt we should just go fix it because somebody has to, nobody has.
Welcome to The Peel, where we explore the world's greatest startup stories. I'm your host, Novak, founder of Banana Capital, the most founder-friendly venture capital firm. Today, I talked to Dimitri Dadiomov, co-founder and CEO of Modern Treasury, an operating system for the new era of payments. We'll start the episode with exactly what that means, and also learn about how Dimitri and his co-founders, Aaron and Sam, started the company in 2018. We'll talk about, and this sounds like a fake number, how the banking system moves over $1 quadrillion per year. We also discuss what makes a good API business, Dimitri's experience doing YC, how to find holes in the market for an initial go-to-market strategy, how it took 6 months to land their first customer, why they should have built a sales team sooner, when distribution can be more important than product, going slow to go fast, and finally, what happened inside Modern Treasury during the collapse of SVB and Signature Bank, who they both worked with. Thanks to Chetan at Benchmark and Sam, Chris, and Ani at Modern Treasury for help coming up with questions. And thanks to Dimitri for coming on. Let's jump in after a short word from SecureFrame. Longtime listeners know SecureFrame is the automated compliance platform built by security experts. Thousands of customers trust SecureFrame to get, stay, and automate their compliance with security and privacy frameworks like SOC 2, ISO 27001, HIPAA, GDPR, and more. They support thousands of your favorite startups like AngelList, Coda, and Ramp. And shout out to Ramp on the recent Series D. I'm an investor in SecureFrame, and I highly recommend it to every founder I meet. Join hundreds of other listeners of The Peel and click the link in the show notes to get started on a demo with SecureFrame's in-house team of compliance experts and former auditors. Thank you, SecureFrame. Second, I just mentioned Ramp's recent fundraise. My friend Nick does growth at Ramp, and he's hooking up listeners of The Peel with $500 if they sign up for Ramp using the link in the show notes. I personally use Ramp at Banana Cap, and if you're a startup founder looking for a corporate card that automates your finances while also saving money, sign up and grab your free $500. And now, let's talk to Dimitri at Modern Treasury. So I thought we could kind of kick things off. You guys are in this really interesting market called payment operations. That's kind of how you started the company. Can you explain what that means and why it was worth building a company around?
Yeah, totally. Before we talk about payment operations, I got to tell you, when you invited me to this podcast, I went and I bought this amazing hoodie with bananas all over it. But unfortunately, it wasn't shipped here in time. So I'm very sad that we're doing this and I'm not wearing the John Banana hoodie.
We'll do another episode in a couple months.
Sounds good. So payment operations, what Modern Treasury does is build software that is aimed to be the operating system for money movement. So companies that move money and connect to banks, ledger things, and keep track and reconcile of everything that happens in their business, we hope to build the best software for that. That is something that we saw up close and personal, and we can talk about that. But it's a problem that really exists in a lot of different companies. And the context, almost definitionally for businesses, that there's some money moving, but specifically certain types of businesses that are in the flow of funds, or they're somehow moving funds through their kind of marketplace or through their financial services offering. They have this problem in a significantly more complicated way than the majority of businesses. And so when you get to higher volumes, you get to higher precision, you get to more kind of errors, it becomes something that you really need software for. And traditionally, a lot of it has been built internally or has been solved with operations teams that are doing things by hand. And so Modern Treasury is trying to help build software for this to make it much easier and simpler to start businesses in those industries.
So when you say doing it by hand, that means probably a bunch of spreadsheets and emails and setting up bank wires manually, things like that.
Absolutely. Yeah. And you can just think about it from like a capital call, venture investing, flow perspective, right? Like you log into bank portals, you refresh things, you mark it as complete, you wait for the wire to show up. If you're doing it for one or two, it's not a big deal. But if you're doing it for 1,000 a day, you really can't do this by hand anymore. Or maybe you can, but you have to hire a large team to do it. And it's not going to be perfect. And so that's where those types of problems arrive.
Yeah, I think you gave an example once of Airbnb where, in theory, you just think, oh, there's some people staying at houses. It's just the consumer side. But internally, there's a lot that also goes on too. They're moving money between all their different counterparties too, right?
Oh, for sure. It's hundreds of people at Airbnb that are occupied, every day building things around this, building and operating, right? So think of every time somebody goes, from the US to France and stays with a host in France, you have to basically think through, the payments on both sides. How do you actually move money? How do you think about a foreign exchange? When do you actually move it? When do you release the funds? What if there's an error? Does it bounce? And is there like a problem? And when the host inevitably calls the customer service line and says, I've got this problem, I can't see the funds, like what is the customer service agent looking at to ascertain whether that's like a real problem or not? But yeah, there's all sorts of problems like that show up, and you kind of have to go solve it within different teams inside the company. How does the engineering team handle this? How does the product team deal with this? How does customer service, or how does, finance and accounting, of course. But there's lots of different places where these problems kind of pop up.
And there's probably, at least from some of the larger corporations I've worked at, which weren't even that big, they might have tens or hundreds of different bank accounts too. And then there's a bunch of different spreadsheets for each customer might have a spreadsheet, or each division or country or segment, or all of those different segments in each country has its own. So pretty complicated.
There's somebody somewhere that knows exactly how those spreadsheets are operated. And if you lose that person, now the whole company doesn't know anymore because it's, saved in Excel in 2013 and a file on somebody's computer.
You've probably seen that one meme recently where it's like a crab holding something up and it's like Microsoft Excel and it's like World Financial System. Have you seen that one?
Yeah, for sure. It's true. People talk about how Microsoft is like not a fintech company. It's like, I don't know about that. The entire financial system runs on Excel.
Yeah. And it's pretty crazy almost how monetized Excel is in a way, because you pay, I don't know, $10, $20, $30 a month, whatever the number is per user, but it's like supporting the back end, or was historically for a lot of businesses. It's kind of wild.
Totally. And then the complexity of Excel. I mean, Excel is such an amazing product because you can use it for like a to-do list, or you can use it to build the most complicated sort of macro with 47 tabs and, running all the way through like 2,500 if you really wanted to. And people do. So it's pretty amazing. I think that's something that as a product, I think good products, especially good kind of business, kind of B2B products, should aspire to have this range of use cases where somebody who's a total noob can start using it without a whole lot of explanation. And I think that's a really good thing. But also you can become a master of it, right? Like when people get certifications in like certain types of software, like in a way, it's like, well, maybe your software is so complicated, you now need to like go to school to be able to do this well. But on the other hand, like there is that complexity that this product actually can do so much that's different.
Yeah, I think I've seen numbers thrown around. The total money moved, the volume it's like a fake number. It's like 750 trillion a year, or it's like quadrillions of dollars, the volume. And obviously a company that does $1 billion in revenue might be moving a couple billion, all these different transactions. So when you think about the scale, it's probably one of the biggest. I don't know how you actually size the market in terms of what kind of revenue gets generated from that, but just the size of the transactions happening are astronomical.
Money moved is not necessarily revenue to the company, right? So if you think about a company that is like a payroll company would be a perfect example. The payroll company moves a lot of money where they literally, all the salaries get moved maybe twice, right? From the company to the payroll company, and then from the payroll company's accounts to the tax agencies and benefits accounts and the employees and everything. That's a perfect example where that company moves many orders of magnitude more dollars than, their revenue. But it's like a daily problem for them.
And like it costs money to support money movement, right? Like you said, you generally need a team. The bigger you get, the more money you're moving. You might have hundreds of people, which that gets pretty expensive.
This is something that you realize once you kind of are in any industry for a while, you get better with scale and with seeing more versions of it. I think this is one of these things that, historically has been a really kind of problematic thing for web companies because, web companies, this is something that we saw at Lending Home. So we were working on this website that talked to the financial system in a mortgage context. So we were funding wires to fund mortgages. We're collecting ACHs every month to kind of bring in the repayments. And we had to build this whole thing from scratch, which was connected to the bank that we were working with. And it was really hard. And I remember one of the things that's kind of set us down the Modern Treasury path has really been that, we realized there was like this very kind of horizontal problem that existed across a lot of different websites and companies, which also like really matters. Like if you actually think about what has been going on in like the web and innovation world, there's all these startups that have been going after things that initially when the web kind of started, like it was all about paying and buying something with a credit card from like a checkout page.
So these are consumer solutions, essentially.
Right. It was basically things like, travel, right? Expedia started with travel and Amazon started with buying a book for, $30 or something. Netflix started with entertainment. Those types of things are kind of this like, $20 to $100 transaction is probably their average transaction. You do that over a credit card. It was painful at the time, right? Like if you go back to, the late 90s, early 2000s, like all these companies had to figure that out by themselves and figure out how to build it. And obviously there's companies like Adyen and Braintree and Stripe that have now been built to solve that problem. So you don't have a problem with credit cards. And one of the things that we've seen also as a result, I'm sure you've probably seen those charts where the like level of inflation in those kind of consumer goods things has come down. Those things are like buying a TV or going on a trip has become cheaper over time. And the things that have gotten more expensive are the things that you pay for using ACH wire and check. So they're like healthcare, education, real estate, housing, financial services, things that as society we really care about. And so I remember like one of the things that we realized when we were at kind of working this problem on mortgages at Lending Home was like, whoa, we kind of know how to solve this problem. And a lot of companies should be built to fix the problems that exist in all these sectors I just mentioned. But there's like this giant boulder. Like if you think about like this highway or whatever, there's a giant boulder that sends traffic the other way because it's just hard to get started. And like there's an additional tax on getting started. You can't have it. Like you don't have a way to connect to the banking system. You don't have a payment operations software product that exists and makes it easy for these companies to get going. And so we kind of felt like, hey, we have an obligation to go build this because actually it is going to enable all these companies to go innovate in how much, housing costs and how payroll runs and how do people get, healthcare. And like, that's kind of, a really cool aspect of Modern Treasury is that we help enable companies that do the things that we as society really care about. And they go build web startups. Like we all, as founders, like we all love web startups. Like a good startup story is an amazing thing. And there's just not enough of those in some of these areas that I just mentioned. So anyway, that's kind of a long answer that maybe you wanted, but that's something that we felt like we should just go fix it because somebody has to and nobody has. And it's going to be taxing on all the founders who want to try to build companies in those segments.
Yeah, and you kind of fixed it, or you kind of built some solutions inside of Lending Home, or at least got super, super familiar with them, right?
Yeah, we had to go build it kind of from scratch, but we got familiar with the problem set for sure.
And it was really interesting. All your co-founders, there's 3 co-founders, Modern Treasury, you, Matt, and Sam, you all started on the exact same day, right?
Yeah, we started the same day. It was a little bit coordinated between Sam and I. So Sam and I joined to kind of start a new product. And it was something that the founders of Lending Home wanted to build as part of the PowerPoint when they were pitching the company, but they never kind of got around to building it. The company was probably about 75 people at the time. So Sam and I joined on the same day on by design because we were starting this retail investing part of the product. And so we were building, so Lending Home was originating mortgages. They're funding these fix and flip loans to people who were buying a property, renovating it and selling it after like 6 or 12 months. And that was the market. They're still now kind of the largest dominant player in that market. And I should mention Lending Home rebranded as Kiavi. So it's known as Kiavi now. But in back then, one of the ways in which these loans would then get sold to investors was really kind of in spreadsheets to large portfolio kind of investors, hedge funds and the like. There was this idea of like letting individuals go and invest. I mean, think AngelList style, how do you actually kind of fractionalize and allow individuals to invest in like a smaller fraction and build a portfolio of these properties and loans and stuff. So that was what we had started. So Sam and I built this website. It was kind of like an e-commerce shopping cart that allowed people to kind of log in and basically buy like $1,000 or $5,000 or some small percentage of a mortgage, which is usually, $300K, $500K, $1 million. And then, but the thing is, these are all fix and flip properties. So every one of these properties has water damage or a bad kitchen or there's some problem with it. So when we built the website, we jokingly would call it ugly Airbnb. You log into Airbnb and like instead of it being like this amazing photo, it's like look, there was like a very, very small fire and we can like cover it up really quickly and add a lot of value and sell it,
Yeah.
And so, so that was kind of the retail investing product. And obviously from a money movement perspective, as soon as we fractionalized the loan, like think about you own $2,000 of this like $200,000 mortgage. So now 1% of every payment that comes back once a month on the first of the month, we now have to do this like fraction math from like sixth grade and say, oh, well, 2 over 200 times the $3,000 payment, you now have to move that money into your account. You have like a wallet. And then you can decide if you want to reinvest it or you want to withdraw it or what. It very quickly, just the number of transactions ballooned. And we had people coming to us from the finance and accounting and other capital markets, other parts saying like, what is this payment? What happened? Kind of highlighting a statement in yellow. And that was the beginning of that was the beginning of us getting obsessed with these problems of like, how do you do this in a simple way?
Yeah. And this, it was sort of like a B2B type product or solution, but you were almost dealing with like the consumer level payments where it was one loan, there was 100 individuals that own 1%. There was hundreds of these loans. You have thousands, tens of thousands of $100, $300 wires.
Yeah, we were doing, I want to say about 70,000 transactions a month when we left. So, that's a lot. That's a long statement.
Yeah. And so an interesting question that I'm wondering, how did you know that like all three of you as co-founders that you worked well together and that you wanted to take this journey? Because obviously you just told us how you came up with the idea, but how did you decide these were the right people to go on this journey with?
Yeah, it's a good question. It's kind of an emergent thing. I mean, we worked together for 3 years. Sam and I literally worked together every single day for those 3 years. Like we were kind of working on the same project. Matt was working on more kind of the borrower facing piece of lending homes. So he was around, but we weren't working very closely in the same way. But we, became very good friends and would go skiing together and so on. So I think it was a combination of seeing the problem, realizing kind of how it's like something that we wanted to work on. And then I think feeling like these are people I would be excited to work with kind of every day for, what could be a very long time. Yeah, I think that's kind of how for me. And then of course there's complementary skill sets as well. Like I was a product manager. Sam and Matt were engineers. Sam was working more on the kind of back end and the bank integration pieces, although he's incredibly talented across the board. And then Matt was working a little more on the front end piece. And so Matt is our chief product officer now. He's more focused on product than on writing code. But in the early days, he wrote a lot of code in the first, 18 months of I think for a while he was still the number one person by lines of code submitted. And I think he just recently lost that.
Oh, man.
So that was something that we all felt like it worked well. We saw the problem together. We wanted to kind of work together and it was just easy.
Okay. And then, so I think you said you were there for about 3 years. And then I think it was Sam said that it was January of 2018. He came to you with a crazy idea, wanted to start a bank. And what was your reaction?
I was like not very interested.
Why not?
It just sounds hard and it doesn't sound like something we know anything about. I think I have a lot of respect for banks. That maybe sounds weird for like a fintech founder to say, but I just think banking is a very complicated business. It's a very large business. I mean, there's 3,000 banks in the US, and all of them, while it's easy for tech people to say, oh, they're all kind of the same, a wire is a wire and like a loan is a loan. That's actually not true at all. When you look at every one of those banks has some strategy around it of who they want to go after, who they want to be the best customer for. Maybe it's geographic, maybe it's kind of a segment, maybe it's an industry. We can talk about that, but it's very hard. Even, Bank of America, like the dominant banks, they don't have that big of a market share in most of these. And I think the reason for it is because it's just such a big industry and it's hard to do well. So the idea of starting a bank, obviously people have done it and it's fascinating to watch and some of them will succeed. But I just didn't have a lot of interest in that. I think it's very like heavy regulatory burden. You have to think about, you have to hire a lot of compliance and lawyers. And what I thought we knew was like the tech part of it. So I remember my reaction was like, no, I don't want to do that. But like, let's just entertain you for a second, Sam. Like if you had a bank, like what even compels you to say that? What is the problem you're trying to solve? And, we started digging in and a lot of it was kind of focused around like API access and how do you get developers and product people to be able to connect to banking services in a better way, which is like a very, very thin, it's an infinitesimally thin part of what a bank is. And I told them like, well, maybe you could just like do that as a product. Let's dig into that and think about that. And then you realize, oh, wait a second, like most companies of any scale actually work across different banks. So even if you solved it as a single bank, and it doesn't actually solve the problem the CFO and the CTO of that company have. They have a problem, which is how do I connect to my 7 7 banks or to my 30 banks. And so any one of those banks having a better connectivity set, it doesn't really help. This doesn't really solve the problem. And I think this is something that is the power, I think, of being hyper-focused as for us now as Modern Treasury. Like, we're a software company. We have zero ambition to be a bank. We've obviously from the very beginning, that's been true. And we have zero ambition to somehow focus on a certain industry or something like that. We want to be this general infrastructure kind of software product. And going back to the conversation we were having earlier about Excel, like, I admire that about Excel, that people use it for very different use cases. Yeah. So my reaction to Sam was, no, you don't know anything about starting a bank. I certainly don't know anything about starting a bank. I don't want to speak for Sam, but I don't really want to start a bank. But like, why? Like, what compels you to say that? And then let's isolate that and then try to figure out if that's a thing. And then, very quickly we realized there is a functionality product there that is missing. We would have bought it at Lending Home if we had it available to us in 2015. This was now 2018. We had built a small version of it in a situation where it's very hard to argue for resources because it's not like your core product. So you're kind of always going saying, no, we totally should not launch a new state and actually start, selling to new attracting borrowers and do all the things that your business is actually doing. It's like, no, what do we want to do? Like, we really want to get really good at reconciliation of ACH. That's never going to be like the first board deck, product slide. But it's really important. Like, it's core to the smooth operations of a company. So you actually have to do that. So anyway, that was kind of the conversation that Sam and I were having when he first came to me with this idea.
And so is that what makes a good API or maybe just like a broader software product where it just solves like a operational headache that maybe saves you money or resources and allows you to focus on what you do well? Is that a way to think about it?
I think it's a great way to think about it. I think there's even a funny maybe way to frame it, which is if you can build software that can do a job, like an actual job, if you can find a job description that somebody's hiring for that says, do this for me, then probably a lot of people will do that. So one of the things that we did early on as like a growth hack is searching for job descriptions that said the word ACH in them, because ACH came up in the 1970s. That was like, nobody's innovating really at like startup companies on ACH. Like, all you're doing, if you say the word engineer in the heading and then say the word ACH somewhere in the body of the job description, what you're saying is you have to make an integration to an ACH connection. That is basically it. That is a very good giveaway that like you have you as a company have this issue or this problem that you want to solve. I think most people don't have a strong view on how to solve it. Like, if there's a software product that does the job for you, great, you do this.
At what point you guys applied to YC, went through YC? When did you decide, like, all right, we're Lending Home is great. We learned a lot. We're going to start this company. Was there a moment?
We had a bunch of friends that we were kind of just like talking to about this idea and just like testing it. And some of them had been YC founders. And they said, well, why don't you use the YC application as like a forcing function to clarify your thinking? So, we definitely were getting a little bit more serious about doing this as a company. And I would encourage anybody who thinks about an idea to like use the YC application, whether you apply or not, doesn't matter. But the YC application itself is just like a good forcing function of like, can you distill this in a couple of sentences? Can you distill the customer types? Who do you sell to? What would you do if you had 90 days? Like, what would you actually do to advance this idea forward? They're very like clarifying, simple questions. So anyway, we applied, and I guess would have been like April or something. This is 2018. And, we got an interview and we interviewed and we got it. And then, it was very clear that we just got more and more confidence as we went through the process, because we met more companies that would sort of smile and nod and be like, oh yeah, like, well, I don't know if we'll be customers today because we're already kind of built it, but boy, do I wish we didn't have to. And so we got to meet more and more people who gave us other ideas. You realize this is one of these problems that has different flavors to it. There's different problems that come up as soon as you're doing payments at scale. And we had some of those at Lending Home, but like Lending Home wasn't international. It was domestic only. So like there was a certain set of problems that just didn't even exist. And so anyway, we kind of kept discovering new problems as we were going along. And it just felt like such a rich area, both in terms of impact and ability to help certain companies that we thought mattered, but also a rich area in terms of things to build and additional new products to add. And, I still feel this way today. That was giving us more and more confidence. And I think that if we'd gone through the process and we were like, realized that it's actually like smaller and like less real than we thought, we maybe wouldn't have pursued it. But as it unfolded, we realized like, this is actually bigger than we thought, not smaller.
And that's really interesting that you say that, because I can't remember if it was Chris on your team or Sam who specifically mentioned it took you guys a while to sign your first customer. And YC, like you said, 90 days, it's usually there's kind of a forcing function, build something people want, they start paying you for it. Like, so what happened throughout YC? You never pivoted. Can you talk about that?
So we got into YC. We started, incorporated the company. We in I guess May or June, and we started building. I mean, so on the one hand, we kind of had a good idea of what it was that we were trying to build. So we started kind of working out of my apartment. Sam and Matt would come over every day, and we would just basically be writing code, writing our APIs, starting the app, doing all the things that would be required to put like an MVP in somebody's hands and actually have them use a product. Simultaneously, we were kind of we did this exercise that I think is really useful to basically write down like all the things that we needed to do as like a founding team. And we put, of the three of us, we put on each one of them was said, who's a primary, who's a secondary, and who doesn't matter. And so we basically decided, this was really like helped us kind of move faster. So as an example, Sam and Matt, Sam's the CTO, he's the primary on all technical decisions. Matt was secondary, and I didn't matter. So they could decide whether they wanted to work on AWS or Google Cloud or, like without me having anything to add to that discussion. So one of the things that Sam and I were kind of primary, secondary on is the bank side. And so we spent a lot of time on working with banks, getting to know banks, opening bank accounts, building our connectivity from our corporate kind of account to this. And that was like really important for us to get to the point where we could feel like, okay, we actually, if you signed up, like we've actually done the work. We're going to go start doing this like right after the contract was signed. Yep. And then, Matt and I were working on a lot of the customer side. So we're talking to companies, understanding their problems, seeing like where use cases were similar or different and who's kind of had the most pain and the most like heat about this. And so we spent a lot of time talking to customers. We had a lot of people who basically were smiling and nodding and saying this would totally be a thing that I would buy in some theoretical world where it was like 4 years ago, but no, I don't need it now sort of thing. And by the way, the other piece is money movement is such a core piece of your business that it's like hard to convince somebody to be the first customer of a startup, right? And I think that's true for all infrastructure companies. So you have to have a certain staying power to keep coming back and show a little bit more progress and kind of convince people. And like you mentioned, we were getting together in YC every week with our kind of cohort of companies, and they all had a beautiful graph that went up into the right and then went from 4 to 10 to 30 of whatever unit they were looking at. We were just like, we open another bank account. And they're like, that doesn't sound like progress to most companies.
Yeah, that doesn't count.
Yeah, exactly. So we ended up, going through demo day with no customers. We never got a customer during YC. We raised our seed round. We didn't have a customer. We kept going. And it took us about 3 months after YC that a friend of mine who I went to business school with, and he was starting a company that was in the healthcare space, became our first customer, which we're very grateful to because, I think in B2B companies in particular, like the founders kind of get a lot of credit and the first investors get credit. And like the first customers who put this whole castle in the air, like into like a real business. So the first customer is really, really important. So Sana Benefits, the company that shout out to Will, they were our first customer. They're still a customer today. They've grown a lot, but it was a very good validation that we were able to get them up and running with SVB as their first bank that we're supporting. And that was about 6 months after we started the company.
Interesting. And I think YC maybe suggested, hey, do something else. Is that true?
Yeah, YC does that. Well, first of all, YC will probably suggest that to every company. I mean, YC is very good at pushing you a little bit on your beliefs or assumptions or like resolve. Try to understand like how dedicated are you to this? Do you really have you really thought out through all the different elements? So I think that's something that YC does in general for a lot of companies. But yeah, for sure. For us, I mean, it's like we would just show up and there's like zero apparent measures of success that we can point to. And so if you do that for a week or 2 or 3, but 12 weeks later, it's like, well, are you guys actually in a different place? And we were like, yeah, we're totally in a different place because we now have a product that works. We can show it. It moves money. We connect to the bank. All these things that have to be true on the path to success. But it just wasn't, because it was a longer thing to build. And even like looking back now, like 6 months isn't like that crazy long of a time to start something that's fairly big and heavy. And a lot of it is because we already knew like how this kind of worked from having built something similar to Lenny Home. So it wasn't like we were discovering and understanding it from scratch. We have this picture of Sam when he got his 2018 Nacha manual. It's this 600-page book that is just like all the different like edge cases and things that you have to understand in order to know how this product works. When we got our YC check, it was like the first thing that we bought, and then it showed up 3 weeks later. And there's this picture of Sam like being super happy, like immeasurably happy that he's got this manual that is. But again, like we needed to go through that in order to build the product that we then eventually, deployed and sold.
Okay, and Nacha is the national ACH association or something.
Yeah, automated clearinghouse.
Yeah, so it's just like money movement rules. And that's probably the opportunity for the company, I think, is what Sam said. You guys basically codified the whole book. You took all these different rules and all these things that were outlined in there and basically built software that would just do it.
Yeah, and we translated a lot of these signals that were like they're already codified in the book.
Yeah,
but they were not in a modern kind of day API set. They weren't very there wasn't webhooks that would just notify you if something failed. And so basically, what ended up happening was every one of these companies that had to go build to this had to build that from scratch. And you discover one of the pain points is either you can read the book and you can actually discover every single edge case. So what happens if this payment gets disputed by the receiver? What happens if you ACH a dead person? That was like an early story that we Matt Marcus put together this post that went to number one on Hacker News, because it's just one of these weirdly morbid things that people on Hacker News are going to be interested in. The intersection of morbid and nerdy is a good place to start. But anyway, all those types of things, a lot of times companies will build kind of haphazardly, and then they discover every one of those because there's a ticket coming in from customer success being this was a problem. A customer called and this is not working. That's a bad customer experience. It's inefficient. Everybody's wasting time. We codified all that and built it in a way that you can just, deploy in a day and never think about it again. And so that is something that's, I think, pretty important. But yeah, that's where that book was really important for us to have early on.
I'm curious, and this is also a question from Chathan at Benchmark, one of your board members. He said, we just need to talk about just how deep you guys went, which we're kind of in the middle of right now. How did the product kind of evolve? Was it mostly customer feedback?
A lot of it is talking to customers and writing code. That's how products evolve. So we talked to a lot of customers and saw adjacent problems. So that has been a lot of the evolution. And the initial set we talked about, it's this payment API that was codifying the different types of payments that a bank might have. So that includes ACH, wires, paper checks, more recently RTP and FedNow are these real-time payment methods. But basically anything that the bank is going to offer and is going to offer programmatically to a company that does this at bigger scale, we want to have a good set of tools. And it's not just API, it's also things like dev portals and logging and all the audits, all the things that people might want to have as they actually deploy this and get up and running. So that was kind of product number one. Now, one way to think about it is really what other problems show up when you as a company start moving a lot of money. Well, the first one is pretty obvious, which is you should probably track it. You should probably track, all these flows of funds that you're doing. And so that takes the form of ledgers. Ledgers was our kind of second product that was a standalone kind of product. And it's really a database that helps with tracking of a ledger. It could be money movement, that mostly is what it is. But you could use it for something like loyalty points, rewards points, things like that. But really, every time that money moves, you should really record it. You should keep track of it. You should have an audit log of that. We probably were 2 years old when we started ledgers. We've been thinking about it for a while, and we started feeling okay, there's a good customer set that within our, as a subset of our payments customers, there's a lot of people that need ledgers and really wish we had it already. And so we built it. ClassPass was our first customer on ledgers. So they have, 80,000 plus studios globally. And every time you go to a class at one of those studios, they decrement an account balance, increment a studio balance. There's may or may not be a money movement actually associated with that at that moment, but you need to track it.
Oh man, that sounds even more complicated. No money movement, but you still have to track.
Certainly, yeah. A lot of companies now are very focused on wallets and closed loop systems and things like that. Yep. And that is literally what a closed loop system is. There's the transfer that happens that everybody's kind of aware of and can see in their account balance in whatever app, but it actually doesn't have a transfer in the US banking system that is similar to that is the same, right? It's not one-to-one. And so maybe you're net settling it every once in a while. Another common problem that you would have is, the bank is asking me for all this compliance stuff and I need to do KYC and KYB and all these types of things. So we added the capacity to add a counterparty, do kind of this KYC piece to it, to identity, and be able to store all that, have the case management system for if something happens, where does it pop up? So that was compliance. Recently, we added a capability to push the data warehouse, for example. Again, once you have a lot of data, you are going to want to be able to push that data into something like, Snowflake or Databricks or Redshift or something like that. And so having all these things ready out of the box is valuable. So that's another piece that we've added. So, and then maybe like just to most recently, the most recent thing we added is we call the reconciliation engine, really building recon around everything that happens in your bank account is something that's really valuable. So when you think about being able to see in real time what is happening in the product, in the bank account, how do you actually get a snapshot without having to do month close, without having to have people kind of go and manually like assign categories and things like that? It happens at every company. And so we've kind of built a lot of these pieces into our both API and app so that you can kind of get moving with this kind of operating system for money movement vision. And when you have an additional problem and you're like, oh, I wish I had a data warehouse connection. Oh, I wish I could track this stuff. It's right there, an app that is ready to go.
Interesting. That was actually one of my first, second corporate internship. It was like corporate accounting. I just did bank reconciliations, 20 hours a week. I blocked that period from my life. There you go. But yeah, it was interesting. It was like good exposure to just how complicated
it's drudgery. It's drudgery. Computers should do this.
Yeah.
Computers are actually pretty good at this, but we just haven't invested in kind of the tooling and the connectivity for this stuff. And so like we have, college interns, high school interns, whatever you are, like going and spending 20 hours a week doing basic math and categorization.
Yeah. And it's so interesting. The math of accounting, it's pretty simple. Like it's like, oh, you add $3,429.86 plus this other random number. It's easy to do that, but there might be rules about when you add things. You have to find these different pieces, link them together. It's more rules based.
Time is a really interesting aspect of it, right? There's all the accruals of like, when it's like, oh, well, we spent like $100 today, but actually it's like over the next 12 months, we're going to recognize like $8 of it, every month.
That was always a nightmare. You talked about there was not good timing initially with some of these people that built this, but you kind of started finding a bunch of customers. Like, was there a weird timing shift where suddenly everyone was kind of ready for it? Or was it just new startups being created? How did that kind of play out?
I don't think that it was like a timing. There's probably more startups being created in that period of 2018, 19, 20. There was a little bit more money in the venture ecosystem. Founders probably got a little bit more ambitious. And so people started doing startups that were not kind of DTC e-commerce things. They were actually kind of moving into these old school industries. And so you start seeing payroll companies that were startups that would offer payroll services. There's companies like Gusto that did that before, but they're kind of more unique. All of a sudden, there was a little bit more of that. There was companies that were innovating like Sana in health insurance, which, would be nobody's, top three choices for a startup area. But there's all of a sudden more willingness to kind of try things in that. Again, I think it's a combination of founder ambition and willingness to fund from VCs. But yeah, so I think there was like an element of there's more companies that were moving into those sectors, and they all basically were encountering the problems that we saw at Lending Home. And there we were. And sometimes we would get introductions. We did a lot of content, so we'd try to get people to, when they Googled some of these kind of ACH error codes, like we want to be in the top places online. But also when they talked to the banks that they were trying to work with and said, how would they actually get going? Sometimes the banks would say, hey, like a lot of our clients have used Modern Treasury. It's go check it out. Maybe it helps you. And our pitch to some of those kind of companies just getting started, it's really less about efficiency because they don't have volume yet. They don't have the problem. Their problem's a lot more engineering heavy, right? So it's like, how do I approach this and how do I automate this and how do I focus on my actual business and not make this problem go away, but also at the same time keep it clean and keep all of my finances kind of in good shape. And so that's something that we sold into a lot of those types of companies, and then over time kind of scaled into bigger companies that maybe do have those efficiency problems, and they're actually thinking about moving around some of the ways in which they're doing things across different teams or geographies or banks or things like that. But a lot of it came from companies that were, and many of them have grown a bunch, and many of them are like, customers of ours today, and they're not 3 people, they're 300 people. And that's like super cool to see.
And then to your point, with having an expanded product suite, it's probably easier to go to a large company and say, hey, we're not just doing this one thing and you still have to do this. It's everything. Like you can actually replace us smoothly-ish without interrupting too much.
Yeah, and I think the wedge product can be different at different stages. I mean, I think, like the earlier companies, we end up spending a lot of time with the product and engineering teams because they're really just building the product, and they maybe don't even have a finance team at that point. And then when you're talking about companies in the hundreds of thousands of employees, I mean, they definitely have a finance team, and sometimes they're sort of burdened by a lot of volume, a lot of fast growth, things like that make them look around for solutions to doing things in a little bit less manual ways.
Yeah. And you had a really interesting point where you talked about making content and people would find it. Both Sam and Chris both mentioned you guys leaned into this product-led growth PLG approach, and you found that it didn't work that well in a lot of cases. A lot of people talk about how great PLG is. Can you just kind of talk about what you guys experienced there and then what ended up working at the end of the day?
Yeah, I'm not sure that I would articulate as PLG didn't work. I just think it didn't work for the full customer set of the customers that we wanted. There was companies like Twilio were sort of the darling back in 2019-20 of every investor. And one of the things that people would associate us with was like, are you guys building Twilio for banking? That sounds valuable and that sounds good. We kind of would like look at each other and be like, are we? Like, what is Twilio for banking? Like, maybe, yeah, sure. Nothing against Twilio, just didn't quite, there's no carriers in banking, so I'm not sure exactly what that meant. Anyway, the thing that was really different is Twilio has this like well-known PLG motion around somebody, a developer in a company that is 1,000 people has to go like build something that sends a text message, and they will use that and they'll kind of bake it in, and all of a sudden they come back and they're like, oh wow, we're sending a lot of text messages, like like we should really be like an enterprise customer because it's kind of grew like a weed inside of that product. And there's companies like Uber being like a famous example. They send a lot of text messages as they grow quickly. So if you kind of translate it into the world of payments and banking, if you as a developer are sending out a lot of wires, somebody's going to come and ask some questions. Like that is like, that's not, it doesn't work. Like that isn't actually, it's just a different product.
Yep.
You really have to, it's a little bit more of like a kind of top-down sale in the sense that like you have to get the CFO or the CEO or whoever to kind of like approve this and like go connect to the bank and be able to close the books on it. And there's just a lot more kind of that goes into that. And so we spent a lot of time in 2019 really improving our product and which it absolutely did, trying to make it faster to get started with, trying to understand how do we get somebody to get them to the point where like they're making their first, whether it's transfer, reconciliation, whatever it might be, as soon as possible to kind of get to the point of demonstrate value.
So it's a top-down sale, but really quick time to value.
Hopefully. Yeah. I mean, or like you can kind of demonstrate the value. You can demonstrate like how it works, and then you can almost like in the sale, like demo it for somebody. That's a very valuable thing. And it is like, so like it improves our products. But I think what it did is we like didn't invest in like building a sales team for longer than we should have because we were like, well, I don't know, like PLG is going to take care of it. It's like, no, we actually need to go and spend time and build the muscle and the organization to do this. And so, that's something that PLG has taken us down a road that made our product better, but actually didn't advance our sales capabilities for enterprise companies. More of a general point. The Valley goes through these hype cycles and people get very enamored with something that works and they try to copy it into every different industry. And you kind of have to think about it from a first principles level and say, does this apply to the industry or the customer set or the product that I'm selling? And I think for us, what we discovered was it's just a lot harder to send a wire than a text message, which is maybe an obvious point.
Yeah, very obvious, but maybe not quite at first glance. I've actually heard someone describe PLG as a pipeline strategy, not a sales strategy, which I thought that was a good way to think about it. I don't know if it sounds like that's kind of what you said also, but you just had a way better, deeper explanation.
I mean, anything you do that has any sort of engagement with it is a pipeline strategy. So yes, PLG is definitely a pipeline strategy. To me, like the successful PLG products are products where, or I should say products that PLG should serve well are products that are lighter to kind of experiment with and are easier to get started with. It's just not the case in kind of all things around payments and banking and finance.
So you mentioned the product evolving in 2019. Is that when you raised the seed round?
We raised a seed round in 2018. So we raised a seed round at the end of our YC summer, so in demo day.
And then you raised the Series A in 2019.
Yeah.
So when you raised the seed round, you said you didn't have any customers yet. How did you convince people without any customers? Because if I'm an investor, I'm looking at the pool of YC, all these charts that are going up and to the right. Modern Treasury didn't have that necessarily. Like, what was the pitch and how did you get people to invest?
Yeah, I think at the end of the day, a lot of it was really like relationships that we had before. So for example, the founders of Lending Home were, invested and they were well familiar with the problem. Like the problem spoke to them. They knew us. And those types of connections, if you will, are you build it over years, and whether you have a result of a contract in the first 60 days or not is kind of less important to those types of investors. We didn't raise from that many folks that we didn't know before. We really were like focused on either people who understood, who we met in the journey, who like understood what the problem was because they had built it at other companies. And maybe they were saying, oh, you know what? I don't know, we can be a customer because we've already kind of built it, but like, oh boy, do I understand this problem. It's like a real problem. And so that was a subset of some of the investors. We kind of did like a party round. And so there wasn't like one major investor, but that was an element. People who we'd worked with before were a part of it. So, but yeah, we raised that, I guess, in August, September of 2018.
I think you mentioned throughout 2019-ish, Evolve the product, got some customers, and then Chaitin at Benchmark ended up leading your Series A. How did that happen? Like, when did you meet them? What was the process of convincing him? We met Chaitin through a company that was in YC with us that he led the round for as well. A company called Duffel out of London. And Steve Dome is a good friend, has become a good friend sort of during YC. And so he at some point was visiting from London and he was in San Francisco, came by our office and he just said, hey, you guys should get to know Chaitin because I think there would be an interesting conversation to be had. And so we met up probably I think it was probably July, August of 2019, something like that. So we were, we were 5 people, so we'd made two hires. So we hadn't grown that much as a company. We went from 3 to 5. It was a year plus into the journey, and we had probably 7, 8, 9 customers at that point. And so the thing that was cool, I think, I don't want to speak for him, but I think one of the things that Chaitin appreciated about our customer base is even though it wasn't that big and they weren't paying us that much money, it was very diverse from the very beginning. We had customers that were in all different industries and even different sizes. Like we had companies that were, I think at that point we had a company that was public that was using us at that point. And we had obviously seed stage companies. And so, and it was across real estate and payroll and benefits and mortgage. And I think we all were sort of going slow and methodical because it's such an important thing for this type of product to not move fast and break things. Yeah. But you could see that it was going to be relevant for a lot of different companies. I think you've said it. I know Chaitin said it. You go slow to go fast.
Right.
With YC, it's like you didn't seem like you were making any progress when you were going through, but you actually made a lot.
No, and I think it's actually like whenever you look at one of those like compound kind of charts, right? Like when you look at whatever 1% growth per day or whatever, like the first 80% of it, it's like not very exciting. But the thing is like what you want to make sure happens is you're laying a foundation technically and kind of product understanding wise and customer reputationally, content, things like that pay dividends later.
Were there ever points throughout that process where you're like, I don't know what the right word is, if it's impatient or if you're like, I wish this was going faster? Like, did you ever feel that? And how did you stick with what you were doing and know you're doing something right?
I mean, I always feel like that.
Okay.
I mean, it is, it's, there's definitely moments. I mean, I think that there's like, like early on, one of the things that was just like very hard for us is getting ourselves taken kind of seriously by some of the banks that we were trying to partner with and work with. It's August. It's like 7, 8 weeks into YC. We're like waiting for an email to come back from some bank. They're on vacation. We're like not funded and don't have a product up and running. So there's definitely moments when you look at it and you're like, what am I doing? But I think that like, again, going back to the formative experience for us was that we were the customer that would have been a great customer for this product when we were letting him. So we just never had any doubt that this was like a product that needs to exist. And so I think our mental model was, well, if they're on vacation, maybe I'll go on vacation, but like, I'm still doing this until it's live, basically. It's when you're getting into B2B types of things, you have to be okay with some amount of kind of hurry up and wait in your business.
When did you, so this was summer of 2019. Did anything happen anything interesting between then and March of 2020? Or was March of 2020 probably a pretty significant moment?
Well, we doubled in size. So we hired a few other folks in engineering and others. But yeah, March, we had an offsite, I think it was February of 2020 in Tahoe. And we brought together like 12, 13 people. It was basically all the full-time people in the company and a couple of advisors and things like that. And we talked about values, we talked about culture, we talked about how we want to grow up as a company. And it was a very fortuitous timing because obviously in March 2020, we stopped doing offsites for a while.
Yeah.
And it was very good that we had managed to do it like right then and kind of sneak it in before we went fully remote because we grew a lot more in the subsequent 12 months just in terms of headcount. Mm-hmm. And so having that culture piece set ahead of time was really formative, I think.
What were the most formative things about the culture that you set or advice that you'd give to anyone else thinking about it?
For us, one of the things that we really keep coming back to is there's a certain level of natural curiosity about businesses, about the world, but specifically about businesses, that you sort of have to have when you're working at Modern Treasury. And that's like something that we kind of try to lean into. There's an element of we help companies build their businesses in this very like nerdy mechanical way. And we get together and we like whiteboard how they're like, where the money comes from, where does it sit, where does it get transferred to, where does it, what's the time, what's the cash conversion cycle, all that sort of thing. Yep. That I think is something that is super fascinating, but not for everyone. Some people would find that kind of boring, but like we just find this kind of business school kind of case study element of all these different businesses super interesting. And then we of course help them actually kind of design and put it into motion. But one of the things that we really leaned into is like, how do we as a company both look for that, but also cause it almost inside of the company. So as an example, we started these coffee breaks, as we call them, when March 2020 happened and went, obviously we're working from wherever we were. I remember having a few of these Zoom happy hours that were just horrible. Like they were so boring, like it was awkward. Nobody, like, first of all, happy hours don't work in a way that is kind of like a monologue from somebody. And also like, anyway, so I was like, we need to get some free entertainment. We need to start inviting some people to share with us things that they find interesting. And that's kind of taken a life of its own, where now we try to have them every like other week or something. And we bring in people who are founders, investors, people that are, work for some of the companies that are customers of ours, some people who are, have no connection at all to anything except somebody knows them as a friend. And they would just have an interesting story for us. And it's one of my favorite parts because it's just like I just find it super interesting to just like learn about these things. So those types of, I think the generalized advice is, as a company, like figure out what you want to really encourage and then find ways to kind of drive that.
Yeah, you just have to be really intentional, setting what you want and just living it, delivering it.
Yeah. You also can't, I think as a founder, you have some outsized impact, but culture is emergent from like the people that you bring into the company. And so it's not something that you decide and so it shall be.
Yeah, it's like you do decide it. The second order effects of your decisions are really what drives it. And then I think you guys just ramped up hiring. Did you raise money and you had to hire, or was it like customer pull? Like you just needed a bunch more features?
It's all of the above. I think our product was getting more ready. So we were getting to the point where going back to the PLG growth was working to some extent. It wasn't maybe working as well as we wanted to, but we were bringing on a bunch of companies. We had to kind of spend time with them. We had to add new banks. We had to kind of do all kinds of things that were really just a factor of, yes, we had some more money, but more importantly, we had more customers. And so we started kind of bringing on people that had seen this problem before at other places, people who have like had, other careers that were relevant for us, whether they're coming from banks or coming from other kind of tech companies with more scale or, things that we needed as we grew. Content was a big investment for us from a marketing perspective. So we spent a lot of time on how do we make sure that we build the journal and some of the other Learn, which is our kind of like Investopedia for all kinds of payment ops terms and things like that would just bring people to us when they were in that moment, when they're like trying to think about how to build it. And we were like, how do we intercept them? And how do we like make sure that our name is known and how to make sure that they come to us? And before they build too much, they know that there's an option to not build it. and they can just, which is, again, it's like a new category. It's a new type of product. So it wasn't immediately obvious to everybody that you didn't have to build it yourself.
Yeah. So what type of content was it? Was it like, hey, here's how to build this. By the way, just use us instead. We just did it.
So some of it was just like, we were discovering new things as we were going along and we're just learning about it. And then we were sharing with the world. It's a little bit of the build in public kind of concept. I think it's fascinating, actually. There was like this hole in the content world, I think, because there is so much content on the like in the investor questions of, is this a good business? Like, is insurance a good business? Like there's Warren Buffett letters telling you insurance is a good business. But if you're like, I want to start an insurance company, nobody's like, this is how claim payouts work. Like, this is what you have to build in order for claim payouts to be smooth. This is how reserve accounts should be set up. Those types of things that are more mechanical in nature, nobody was writing about. And maybe for good reason. But what we discovered was when somebody decided, I am starting an insurance company, and it's like, I do want to find out how this works. There was like a hole in the content world that nobody kind of told them, like, this is what you do. Here's like the 5 steps. And so those were types of, and you can find them on the Modern Treasury Journal today. If you can kind of go back in time and see the earliest posts, like some of them were change logs and like like things that we're actually launching. But then a lot of them were just like, if theoretically you were doing this, here's how you would do this. And here's like the IKEA manual for building your business. Forget about whether it's good or bad, or if interest rates change it, how good or bad it is. Like mechanically, like you've decided to do it, now what? And like that was a lot of the content that we put together.
Is that necessary almost, is finding like a marketing hole or some kind of like go to market where it's like undervalued, or you get like super cheap CAC or something like that, like customer acquisition costs are really low? Like you almost need something like that for a startup to work?
Yeah, I think it's important in every business. I think that most companies, when they get started and experience like somewhat rapid growth, there is some mechanic that's working. There's a growth loop that's really hitting. And whether it's something that's intentional or discovered by accident, I mean, oftentimes there's a platform shift or something changed in the world in general that drives that behavior that all of a sudden people can find. But like, I do think that there is like, if you think about the ingredients that are required for a company to be successful, for a new startup to be successful, obviously a product that solves a problem is step one. Like if you don't have that, I think it's hard to scale that. But I do think that distribution is incredibly important. And in a lot of cases, maybe even more important than a product. Sometimes you see companies where you're like, people will say, oh, this product isn't actually as good as this other one. Like, why is it winning? And the answer is usually something to do with distribution. So yeah, I think that whether it's CAC and it's like an economic thing, I think for us, it was even less an economic thing and more, how do we intercept the conversation when somebody is actually thinking about these problems? And that's like a big question for a lot of companies, which is, we're not going to convince you to go buy this product out of the blue just like today. But like when you have the problem, we want you to think about us. So there's like a brand element to it that I think is pretty important. So yeah, but I think that every company that succeeds, if you actually like look at how people sign it, it's not smooth. Sometimes it's like these, there's like wrench turns. People figure out the next thing that lets them grow, or maybe like sometimes the mechanic dies for some reason. But I think that thinking about growth loops and things that drive people and eyeballs and conversations towards you is, I don't want to say it's more important than the product, but it's like only infinitesimally less important.
Were there any moments where maybe it broke for you guys and you had to figure out how to fix it?
Well, I mean, just earlier this year, like both kind of conversations initially, it's kind of top of funnel and kind of bottom of funnel closing conversations are reliant on like a healthy US banking system. And so in March of this year, when like we had a number of bank failures, we saw like a month or two where like a lot of things kind of slowed down, and because people were super distracted and they were focusing on other things. It was arguably a good thing kind of medium term, but in the immediate term, like it was definitely a very kind of painful moment, both painful to watch sort of, friends and partners of ours go through some pretty difficult times, but also painful for us in terms of like the impact it had on our pipeline.
Yeah. And it happened at a really interesting time too. I guess the story that I heard was we were at kind of an offsite planning, you weren't really at your computers ready to react to this. What happened? Well,
it happened a few days after our SKO. It was actually, so we had our sales kickoff the week when the SVB failure was. So it was kind of, we had everybody together. We talked about how to, work as like one team, one dream. And then we like went across the country, and then immediately like basically were thrown into a moment when we all had to work together in a very coordinated way. I suppose it was well designed in a kind of a team building sense. But yeah, it was kind of a crazy thing to live through and to see up close.
Can you kind of take us inside that day or that week or month? I guess maybe it's still ongoing. Like, what was it like inside of Modern Treasury? How were you helping your customers?
Yeah. So to take you back to, I think it was March 9th, if I'm right, that Thursday, like that Wednesday, Thursday, there's basically all of a sudden, there started to be a lot more kind of messages and tweets and questions and stuff that were coming from founders, from customers, from VCs about companies' reliance on SVB and, how kind of like the single bank question that people were having, which is like, do you have another way to operate your business? Now, remember that most of our clients, it's not just their corporate cash sitting in some account. It's actually very core to the operations of the business. And SVB has been a very good partner of ours from the get-go. We had a lot of companies that were primarily banking with SVB, sometimes solely. We really were focused on serving our customers well, but that meant just like a deeper, better integration with SVB for a lot of them. There was kind of the snowball effect. One of the things that we had to think about is just in real time, do we want to encourage some sort of panic or not? And there was just like a lot of panic in the air. People were at the time felt kind of unreasonable, but then it's one of these things that's kind of like one of those game theory things where like if everybody's freaking out, it doesn't matter if the reason is right. So we're kind of helping customers one-off on Zoom calls and phone calls and stuff like that. And then one of the things that was really interesting, so on that Friday at like maybe 10 a.m. Pacific or something like that, the FDIC took over and publicly said SVB is now like taken over by the federal government. And it was a crazy moment because it's like something that you've read about in books, but you haven't really seen for a long, long time, at least not to a major institution in the US. One of the questions that we immediately started getting was from the companies that are working with them, like what's happening to our business? Like we have to go process certain payments for our business next week on Monday. Like what happens? One of the things that we realized, there's a lot of questions of, well, is the system actually working? Like, can I log in? Like what would happen? One of the things we realized was we had connectivity to a lot of different systems at SVB. And so we could actually monitor and see. So we put together a status page, kind of a third-party verification, if you will, of what's actually the live status of these things. We felt very sort of helpful in that because we actually had a unique view into some of these systems in a way that other people haven't. Mm-hmm. And also it was very objective and we weren't kind of like trying to grow the panic or, we're trying to kind of provide a useful service. So we started publishing that, kind of updating that every couple of hours. Pretty quickly after, people might remember there was another bank called Signature Bank that also failed that weekend. And the FDIC took over, which is also a bank that we supported. And so we put together that template for the status page for another bank. And we started, and again, we kind of kept updating it. And so, as we rolled through the following, call it 2, 3, 4 weeks, you started seeing a lot of activity across companies trying to like explore other banking options, or they're like trying to like make sure that their accounts were in good standing, get funds moving again. And we were kind of like updating and helping companies all throughout. So I think there's an element from just like a crisis communications perspective. We were very focused on how do we provide a good, useful service that is uniquely like something that we could put out into the world without causing panic, without causing people to kind of freak out a little more. So, but it was a fascinating thing to live through. And I think just also as a company, as a team, like going through something like that together is very formative because we had a lot of Zoom calls on the weekend where everybody's kind of like live updating, like what are the engineers seeing? Is the status update happening or not? How do we actually upload it? Marketing, web copy, all these things starting to kind of move. It definitely galvanizes the team to work a lot more closely together. And I remember that Monday we opened so we were based in San Francisco. It's our main offices in San Francisco. We opened a New York office the Monday after, and we were going to have a little party and like have like a kind of, none of that happened. We just moved in immediately, just got to work because it was like, oh, well, it's a good thing this office works. It's a good thing we have Wi-Fi. Okay, get back to work. And so we kind of never celebrated moving into our New York office because it was literally the Monday that SVB came back online.
So you still haven't had the party?
We've had plenty of parties. We haven't had a true like office warming party.
Maybe the next coffee chat or one of them. Do you want to move into kind of rapid fire, a bunch of different questions?
Sure.
If you go back to the early days of Modern Treasury, anything you would do differently?
I think I would spend more time with customers. I mean, I think that there's nothing that isn't made better by just spending more time with customers. So whatever time I was spending on not just talking to people about how they might want to use our product, like I would not do.
Okay, that's fair. So there's a question from someone on your team, Ani Narayan. He asked, where is your favorite place to go on a hike?
Oh boy. Favorite place to go on a hike. I would probably have to say the best like outdoor kind of hiking backpacking trip I've ever done. And just so happened it was kind of when I was in high school, so maybe it was like a formative time, but was around Ross Lake in North Cascades National Park, and did like a long backpacking trip kind of up and down the sides of Ross Lake. It's a very long lake, kind of starts in the Canadian border and kind of goes south.
Is this Washington?
Yeah, this is in Washington. It's about 3 hours from Seattle.
Okay, interesting. And that's where you grew up, right?
Yeah, I grew up in Redmond, which is 20 minutes east of Seattle.
And then you send these weekly Saturday notes to the company. What are those?
Saturday notes are, again, one of these things that just like an evolved tradition. But when we started being a little bit more distributed and a little bit more, everybody kind of focused in their own little world, it just felt like something that was a good practice for me, having kind of sitting in the middle and getting little updates here and there from different teams to share back. And like, here's something that is really cool that happened this week. Here's a customer we saw, and here's somebody who's joining next week. Here's our coffee break kind of guest for next week. So it just evolved. And as we've grown, we're 160 people now, still do them. And that, maybe some people read them, some people probably don't, but it's a good way to keep the company kind of updated and just kind of share some of the things that are cool that are happening in different parts of the company, where maybe if we're all in one office, it would just naturally happen more. But especially when we're like all remote, it was particularly hard, I think, to like highlight those things.
So you kind of like synthesize everything going on and fill people in on maybe the things that are most important or you thought were good lessons or learnings and just keep information flowing.
Correct. It's almost like a little investor update sort of thing, but it's like across the company, like, hey, and it's, kudos to somebody who's done something really good. I mean, it's a little bit more team focused, but it is, here's how, if there's a week that goes by and you can't point to ways in which your company is like better off or has grown or has anything's changed, could be a bad thing too. It doesn't have to be a good thing, but there has to be some delta after you spend a whole week. Otherwise, what are you doing?
And I've also noticed you seem to do a lot of reading. You mentioned earlier you really like studying business and learning all these different lessons. Do you have a favorite business story or book?
Favorite business story or book? I have a ton of them.
While you're thinking, I'll also give a shout out. You have a Medium page. I think if you just search Dimitri Dadiomov, you'll find Dimitri Dadiomov Medium. You'll find you have, I think you do reviews every year. You have a bunch in there. Do you have a favorite that stands out?
Yeah, I think one that just jumped out at me is Robert Caro is this writer that writes these massive biographies of folks. And he has a little tiny book called Working. And it's about his way of working. And, he's famous for spending like 10 years doing research before he writes a book. And so he knows like everything about something. And it's like super well written. And he focuses on like the descriptions and the place and the title and the rhythm. And like it's fiction level writing in a nonfiction book. And so anyway, his long form kind of books are really good. But I specifically think Working is interesting because, I think there's a Charlie Munger quote that's like, life's all about taking a simple idea but taking it seriously. And I think that that's something that he kind of does in his life. And I think that it goes for like startups or for really any kind of like thing that is like around craft and you have to kind of focus on it for a long time. Like I think that mentality is really good and he just will spend, he's just like an extreme version of that. So Working by Robert Caro.
Working. Okay. And then last question, you probably studied or read about a lot of founders and CEOs over time. Do you have doesn't have to be current, can be all time historical story too?
I think, there's, it's hard to just pick one, but I think that the people that I really admire, the people who like go out and build something that just takes a long time to kind of bake and people look at it and they don't quite know like what it is for a while. And I think that, Warren Buffett is a perfect example of this, where I don't think that people in the 1960s were like held, Berkshire in high regard, but,
failed company, right?
Proved them wrong. I think Jeff Bezos has elements of that as well, where a lot of people thought that Amazon was just like burning money. And it was like, no, actually building warehouses. There's lots of examples of that. Craig McCaw's like that as well. He started McCaw Saylor, which became AT&T Wireless, but he was sort of the first person to say, you know what, we're going to go and build a bunch of towers and put cell phone antennas on top of them. Nobody thought that was a business that made any sense. And then, proved them wrong.
Yeah, pretty important nowadays. All the different companies that we've mentioned in the last, hour and a half have all relied on cellular data in some capacity. I actually have another question. Do you have any questions for me at all? Anything?
Well, I'm curious about, you kind of started investing and kind of grew this sort of like meme way to kind of get in front of founders, get in front of investors, et cetera. And the world has gone through all these different changes just in the short time that, we've been in business as a company, like 5 years. And I just think about the world of 18, 19, 20, 21. So it's like every year is completely different. It's like there's a pandemic, there's no pandemic. The markets are crazy, the markets are not crazy. Like there's bank failures, there's no bank failures. So I'm curious, how do you think about the next year, given how fast things are changing and moving? And, we were just talking about superconductors right before we started recording. That was like a hype cycle that was about, 10 minutes long. How do you think about investing and kind of like what you should be spending your time on?
For me, I guess the way I think about it, just broadly what I'm interested in is similar to, I'm just really interested in learning about businesses and how things work. And I don't ever think I would be able to start a modern treasury, but I think I would be good at investing. And then when I think about just what's my advantage, I don't live in San Francisco. I'm there maybe every couple months, spend a week there, but I live in Michigan. So for me, it's almost like a internet first approach. It's almost like a PLG approach where initially, this was probably 2017, serious content online, Twitter, almost saw this opening in the market when you talk about like different channels that are maybe undervalued or like where the opportunity was. It's kind of like, people love memes, but everyone takes themselves super seriously, all these VCs. So what if I just make some memes? And then I kind of tilted towards that. And I was still kind of doing more serious stuff, but the memes almost took over. And that's how a lot of people got to know me. And I still do them, but now it's like, all right, I should probably start doing some more serious stuff too, right? Like I've been doing this for like 5-6 years now. I kind of think about it as like started with Twitter only, and it was like blog, then added a newsletter, podcast. Obviously, we're recording this in video. This goes up on YouTube. We'll put clips. So I just kind of think about it as like, how can I do these things that just leverage my time and founders' time to help them? It's kind of like a PLG approach to VC in a way.
I still remember, for whatever reason, there's a clip that you did, and it was probably 2020 or 21, of like a VC that's like trying to take a meeting with a founder, but like their Tesla keeps like, one of their Teslas or something keeps being stuck or not charging or something. And they keep like interrupting and going back. Yeah, exactly. The gardener, and like the nanny's driving the other Tesla or something. Anyway, it was just, spot on for some experiences that founders have with VCs in some cases.
Yeah, well, and that's always what I think about. It's just like, what if founders actually care about, and what are they interested in, and how can you meet them where they are as an early stage investor? I'm probably not going to show up to a conversation with you and outsmart you on anything that you're doing. And if I do, I probably shouldn't be investing in your company. Like, you should be the expert, not me. So for me, it's more about just thinking of ways to meet founders and build trust. And ultimately, like, my pitch as an investor is, hey, we're going to have like a relationship. We'll work together. I'll be really responsive, but I'm not going to tell you what to do. I'm not going to mess anything up. I'm going to get out of the way. When you need my help, I can try, but I don't really want to promise I'm going to like build your company or save all these problems that you have. And it's not really the best pitch in a lot of cases, but in some cases it actually is an interesting pitch for some founders. So I guess that's kind of where I'm at today. I mean, my strategy, it's kind of slowly evolving how I think about investing.
And the world also changes around you, so you have to be responsive to that.
I mean, I just kind of think about, what am I good at? What's my competitive advantage? Lean into it. I don't only do things that I think I'm good at, invest in things that I understand. So when we talk about hype cycles, I kind of think about it as like, what's the application of this new technology and solving a business problem, or, having higher margins in some case, or, does it unlock more revenue or cut costs? And what kind of new wedge does that create to create a new business? Or does like a new industry open up to using software now because of this? Can you acquire and serve customers cheaper and more efficiently? That's usually how I'll approach like some new hype wave. I'm like, what's the real problem being solved? And it's like this is like a business that you can create here, which sometimes there are, sometimes there aren't. And also sometimes I probably read it wrong, but it's like a learning thing for me, but it's fun. I like it.
That's awesome. Well, thank you for inviting me on. This was super fun. I'm glad we got to do this.
Yeah, thanks for coming. Thanks for tuning into The Peel. I want to take a quick moment to ask for any feedback on the show. Guests, topics, format, pacing, lighting, video quality, editing, anything is fair game. Leave a comment, shoot me an email, DM me on Twitter or LinkedIn, or even send me a carrier pigeon. I'll read it all. If you don't want to miss an episode, follow and subscribe wherever you listen to podcasts. Subscribe to the newsletter in the show notes to get new episodes in your inbox the moment they drop. Thanks again for tuning in. See you next time.